see me?
She has it so it's on the podium.
Hello, everyone. Thank you so much for joining us, those of you here in person and whoever is joining us online. We have a limited amount of time today, so we're gonna just get started and let folks trickle in when they get here. So just a quick little overview. I work for the Food Shed Alliance. My name is Tess, and I work for the Food Shed Alliance. We are a nonprofit based in northwestern New Jersey, focused on supporting farmers, feeding people, and protecting the environment. We operate mostly through grant funding and are proud to offer free education to farmers. This particular workshop is funded through the TOPP program, or the Transition to Organic Partnerships program. It's a new USDA initiative that is working to offer free education to farmers, organic farm mentoring, just in general support organic farmers and farmers who are interested in transitioning to organic. So I'll definitely send more information about that to everyone in a follow-up email, but without further ado, we're so grateful to have Maria Stewart here. Please, Maria, take it away. Thank you.
All right, thanks Tess, and welcome everybody. I'm glad to be here to talk about everyone's favorite topic, farm finance. But you know, we're winding down 2024 and we might be looking ahead to the next growing season. You probably ordered your seeds already. I own and operate a goat dairy. Most of my milking herd is already bred and confirmed pregnant. So we are looking at 2025, just around the corner. So it is a good time to start thinking about how are you going to be approaching that next calendar year with respect to your farm finances, and hopefully you're going to make it a profitable farming year. So today's workshop, we're going to have an overview of just kind of who I am, where I came from in terms of how I got to this point in speaking about farm business planning and other nuts and bolts of running an agricultural enterprise. Then we'll do a short self-assessment for your own operation, thinking about where you sit with respect to our needs with profitability, understanding your finances, understanding the costs of your operation. Then we'll be looking at what I'm calling the business audit strategies. And this is relevant whether you're new into farming, established, somewhere in between. This is going to look at determining cost of goods sold. How much does it actually cost you to raise your product and get it to market? We'll discuss evaluating your sales and distribution channels. You probably know there's better ways to sell things than others, and perhaps you're already functioning in one of those optimal sales channels. Perhaps there's room for improvement, and we'll talk about how you can make those decisions. We'll discuss planning for the unpredictable and then also setting your sales goal going into 2025. So that's the overview. When we get at the end of each one of these small segments, we will open it up for questions. We'll be monitoring the chat, and also we'll take questions from the room here in person at Duke Farms. And I guess a shout out to Duke Farms for hosting us today. Very, very nice to be at their facility. So an introduction of myself. My name's Maria Stewart. I'm the owner and founder of Growing Brilliance, which is a consulting firm aimed to support small businesses, particularly in the agriculture space. And I've really been in food and agriculture my entire life. 1989, there's little Maria standing next to the river at her family farm. I grew up on a commercial vegetable farm. My family was running a farm-to-table vegetable operation in the 80s and 90s. Before farm-to-table was a thing. We were like 20 years too early. Needless to say, although I had an opportunity to take over the family farm at the ripe old age of maybe 22, at that age I was a punky, almost ready to graduate college type and said, I don't want your stinking farm. I'm out of here. And although I didn't, leave the food space, I did step away from agriculture briefly. And the running joke in my family is after a couple of other chapters in my life, I'm now back into agriculture, running a goat dairy in Western Hunterdon County, Gorgeous Goat Creamery. And I got into this space with consulting because a couple of intersections in my professional history were really they were congruent, and I realized that I had some extra things to share with our agriculture community, and I was hoping it could benefit the broader group. My first chapter after college was actually in academia. I was a professor, and if you know anything about research in the university setting, researchers have to apply for grants all the time to fund their research lab. So I spent almost 10 years writing grant proposal after grant proposal after grant proposal. And hey, I got things funded. It was great. And was able to support my research lab. My professional trajectory took a different turn, and I left academia, left the grant writing beside, and went into the food industry for a few years. Started my goat dairy, realized, oh gosh, there's grants for agriculture. Maybe I can use my grant writing skills and start getting our farm some money. Well, hey, it worked. And I recognize that there's an opportunity to help folks learn about not only grant writing, but also the business side of agriculture as I've developed our own goat dairy farm. So that puts me now today in 2024 with my consulting firm Growing Brilliance. So it's a separate entity from our goat dairy farm, but using a lot of the learnings along the way to be able to support the services I do provide. So today we're talking about farm financing. You might be thinking like, why was she talking about grant writing? Well, farm finance is really important, especially if you're looking at funding from a lender or from a funding agency that might be offering grants. So this is kind of the foundation for being not only successful in your business, but if you want to take that next step and be able to secure extra ways to finance your operation. So we're going to be looking at the foundation aspects as part of today's workshop, making sure that you understand your finances, how you're making money, how you're losing money, and what you can do in the next year to fix that. So that's a little bit about myself. I'd like to start with just a self-assessment, and these are questions for you to reflect on. And actually, before I get too deep into this, I wanted to mention you can access the slides via my website. I'll actually just flip over to that real quick in case you're interested in getting those while we're in the middle of our presentation. So my website's growingbrilliance.net, and if you just scroll down, you can see get the presentation materials. I actually got this posted before our talk today. So you can just get them emailed right to you if you'd like to have the slides, and I'll have a link to this at the end of the presentation. But recognizing that maybe you would like these slides in front of you right now, if you're especially on the remote side of things, you can download those as we go. But they are available, so don't freak out if you can't write everything down. All right, self-assessment. So these are questions that you can reflect on and ask yourself, no matter what stage of your farm business you're at, whether you're brand new, you're emerging, or you're well established. But the first one is, why do customers buy from you? Why do they choose your farm products versus another farm's products? Why do they seek you out, whether you're at a farmer's market, a roadside stand, or you're a CSA option? What makes you unique and different? And these are important things to consider because it's going to indicate what aspects are bringing more value to you within the business. So maybe it is that you're organic certified. Maybe it is your actual geography, that you're in a niche location where you don't have a lot of competition nearby. Maybe you offer really unique heirloom varieties of produce that are intriguing to people who are especially interested in culinary. So think about why customers buy from you. And we don't want to let go of that as we think about some of the more dry content, like, how much does it cost to raise this turkey? But people are choosing your products for a reason, and we want to ensure that this is always at the back of our mind when we're making business decisions. The numbers might tell us one thing, but when we look at why customers are choosing us, that might tell a different story. We want to be able to blend these two in our decision-making process. The second self-assessment question is to consider where you'd like to see your farm in the next 3 years. So fast forward, if we're in 2027 going into 2028, where do you think you're going to be with your farm business? Do you think you're going to have more diversified product offerings? Are you going to be producing more, selling in a more diversified geography? Are you going to be expanding into different types of crops, not just maybe fruits or vegetables? Maybe you're going to get into livestock as an example. Where do you want to be in 3 years? And it doesn't always have to be grow bigger. but maybe it's going to be even more specialized, that you want to, narrow down your offerings and really become good at one thing. So these are the areas that you would be wanting to evolve over the medium term. And these are the areas we're going to kind of, hone in on as we do this business audit, thinking about, some of the more dry financial things, like where do you want to be 3 years from now? And I choose 3 years as a timeline because a lot of times we have to do things for a couple of years before we realize whether it's successful or not. Most of the time, if we're starting a new endeavor in our business, we're not able to actually make a fair assessment within year one, because not only are we learning ourselves as a business owner how to navigate something new in our operation, we're also exposing our customers to something new that they might not be aware of that we offered. And so it takes time to expand that knowledge and awareness. So 3 years is a good time to be making a decision. You have your 1 year to kind of get your feet wet, figure things out. 2 years, second year, you really start moving and say, look, I'm getting this more streamlined, we're becoming more efficient. And then by 3 years, that's when you can start making that decision of, do I stay in this space or do I need to move and pivot? Then number 3, behind the scenes. For this self-assessment, I'm wanting you to think about, how are you operating when you are sitting at your desk doing the administrative aspects of running your business? And I think for many of us as farmers, these aren't our favorite things to do. I'm seeing people shaking their heads in the room going, no, yeah, I feel you. I'm a spreadsheet fanatic. I love spreadsheets. But QuickBooks and my bookkeeping, no, thank you. I will gladly outsource that to somebody else. But there's a couple of systems that you really need to have in place. And this is something that you can obviously change systems as you get up and running and you learn the good, the bad, and the ugly of certain systems. Also, if you're new, I've started some of our farm business, just selling very casually, using a notebook to write down sales, and I realized quickly that that was not going to be an effective way of tracking sales. So we moved into a point of sale, and we use Square now as our primary point of sale. I'm not advertising for that, but it was a very quick evolution of like, oh, I can just keep track of this in a notebook and write it down in a ledger. No. So think about how you're currently operating and whether or not you enjoy this system, or if you don't have a system, 2025 might be the year that you explore a sales tracking system. So you might use a point of sale like Square. There's other providers that can help you track your sales. But it's valuable to be able to categorize the types of products you're selling, whether it's something that's fresh, value added. If you have diversified products, maybe you have eggs and you have produce. Tracking those separately is going to be really important as you do your financial analysis. So sales tracking is one system. Business financials is going to be another system, and a lot of folks use QuickBooks as an example. There are other new emerging systems on the market now. FarmRaise and Ambrook are both offers out there for financial management. This is to enable you to look at your profit and loss, to track expenses and your sales. So there's ways to sync your point of sale that you're actually transacting with customers with these other financial systems. But as you are evolving in your business, it's good to have a platform where you can do that reporting, especially looking at a balance sheet and profit and loss statements. So if you don't have a business financials tracking system currently, this might be one you want to explore to start off the new year. And I mean, it's hard to believe 13 days and we'll be into the new year. But if you don't have one, it's a good time to consider it. And then the last question I have for your self-assessment is your financial goals. How do you set them? How do you decide what you want to have your numbers look like for the next year? Or do you set them at all? Maybe we're not focused on the money, we're maybe more focused on the process, and that's okay too. But at the end of the day, we typically have to pay our bills, right? And we don't want to have to be leaning on off-farm income all the time to support what we're doing. Many of us do rely on off-farm income, including our farm, but we want to have our farm generating its own revenue and maintaining profitability as much as possible, right? So thinking about how you set them, what kind of data are you currently using to inform your financial goals? And if you're not using data or not setting financial goals, hopefully by the end of our time together today, you'll have some inspiration to start doing that. So if you didn't get a chance to answer these questions in your head as I was speaking through them, feel free to consider these after our workshop, because this is going to kind of set the stage for where you might want to make those improvements for your next calendar year. All right, so we're going to get into our first topic of today's discussion, and that is the cost of goods sold, also known as COGS. So cost of goods sold is something that I think every business owner should be evaluating from the very beginning. And this is something that, as we started our farm business, the Goat Dairy Gorgeous Goat Creamery, we actually started with selling handmade soap very early before we started our dairy, as a way for me to raise money for goat food. And I had no idea how much the soap cost that I was making. I was just going to the farmer's market, selling it, making $80, sweet. I just paid for goat food for the week, or maybe 2 weeks, and life was good. At that scale, understanding cost of goods sold really wasn't that necessary, but as the business grew and we started to move into our dairy operation, it became apparent that I had to understand how much was it going to cost for these goats to make that milk, and for us to transform that milk into cheese or bottled milk or yogurt. And when I put it up for sale at a certain price at the farmer's market, am I actually making any money? So the cost of goods sold is essentially addressing all the direct expenses that are attributed to the sale of an individual product. I want to highlight a couple things in that statement. Direct expenses, so things that you can directly draw that line, that it costs me this much to buy this packaging, and this packaging is used for my salad mix. And you can make that direct connection. Sometimes it's easy to get kind of disoriented when we think about cost of goods sold, because you'd be like, well, I put my salad mix in the refrigerator, and the refrigerator uses electricity, so that's an expense. That's going to fit more into operating expenses, because electricity is something your farm uses for lots of different purposes, and it's hard to say how much refrigerator electricity that salad mix was actually taking up. But it's much easier to say how much packaging that salad mix uses, especially if your salad mix is the only product using that particular packaging. So the direct expense component is really important to consider with our cost of goods sold definition. Secondly, we look at this on an individual product level. And this can be kind of scary, especially for produce farmers. How many different crops do you grow? How many? It could be more than 3 or 4, right? So this is where you'll need to make a judgment call if you want to get into this analysis. The right way to do it would be to do it for every single product, but you may need to aggregate some things. Like you may not want to separate red leaf lettuce from green leaf lettuce, as an example. But you might want to separate prepared salad mix from head lettuce, because there's different things that go into getting those ready for sale. So when we look at cost of goods sold, we want to be thinking about this on the individual product level. And this is going to enable us to understand how much it costs to get that salad mix out in front of the customer, ready for them to buy it. And some examples of expenses that would go into your cost of goods sold are things like seeds, packaging, as I mentioned with the salad mix example, and also labor that you can directly attribute to that particular product. This gets a little bit gray when we think about produce operations and even some of the livestock operations, because your labor time may be used to address many different crops at one point, with applying soil amendments or even harvesting. But the better job you can do at identifying how many hours of time does it take to do something specific for that individual crop, the better off you'll be with calculating your cost of goods sold. Then I mentioned the things that are not included are operating expenses like utilities, rent or mortgage you might be paying for the property where you're farming, the cost of the sales channel. So if you pay a farmer's market table fee, that's not considered part of your cost of goods sold. We'll talk about that a little bit later, but that's going to be more, thinking about the operating expenses. Also, if you have insurance for your business, that's covering your whole operation. That would be something in the operating expenses category. So we want to know our COGS so we can be able to calculate our gross profit margin. And that's enabling us to know how much money do we actually make after we transact that money with the customer and we paid all of our bills for the packaging, the seeds, and the labor. Hopefully we have a positive number after we do that math. So let's give it a try. As part of the resources for this talk, there is an Excel spreadsheet that you can download from my website, and this is a COGS calculator or a COGS worksheet. It's one example of how you can use a systematic approach to go item by item and calculate that cost of goods sold. So let's pull that spreadsheet up. So this spreadsheet is designed to be a tool for you to start this cost of goods sold journey. There are many tools out there that you can use, and I just felt it was relevant in this context to give you a tool to start with if you want to dabble around with this. So the spreadsheet is laid out. I have 5 identical tabs down at the bottom. So item 1 looks exactly the same as item 2 except for the zoomed aspect. So this allows you to, be able to replicate this for many different items, and feel free to, continue duplicating spreadsheets. But what you basically want to do in your cost of goods sold is list every single supply that goes into getting that product ready for sale. So it could be packaging, it could be seeds, perhaps you need to have labor for harvesting, for doing extra preparation, washing your produce so it's ready for sale. That's all going to get listed in the column letter B. Then you're going to want to break it down. It's based on that item, how many what's the quantity in the pack? So for example, if you have packaging and you get a case of 250 boxes, you know that you'll be able to put 250 units for sale with that one case of boxes. We also have a cost per pack. So you need to know, like, when you buy those 250 boxes, it costs you $100. These are just examples. And it's also important in today's era to consider the shipping cost. We've seen freight costs go up tremendously for a lot of our materials. We can't buy everything on Amazon Prime, right? So make sure you're looking at your receipts carefully and including any shipping or freight, because that might be $20, $30, $40 that you want to make sure is embedded in that cost of goods sold, because it is essentially a cost of that material that you're using. So it'll automatically calculate in the green cells based on all the data that you've put in the yellow. And at the end, it'll give you a total COGS per unit. So you'll be able to do this calculation and figure out, if you have packaging, maybe you also have labels that you're putting on your salad mix boxes on the clamshells, and those each cost, 10 cents a piece. Then you can start adding up how much does it cost to actually have that salad mix ready to go to the consumer. And the second table that's in this worksheet is your labor calculation. So as you think about the different steps of producing your product, maybe there's a cultivation step, there's a harvest step, there's a preparation for sale step. Think about how many hours it takes and how many people it takes to do that. Some entities will tell you not to include labor in cost of goods sold. I think that's a terrible idea, because without that labor, you're not able to get that product to market. So I'm a firm believer that labor belongs in cost of goods sold, and this is why I have a separate table where you can put in how much is your hourly wage. And what I've automatically added in here as a help to you is if you're paying someone on W-2, which you should be, there's going to be taxes that are levied that you pay as the employer. And also, your workers' comp insurance. And on average, this is approximately 23% of the wages that you pay that person. So this automatically adds in what that fraction of taxes and insurance would be for your labor. And then your hours to have that person get that particular quantity of product for sale, how many products or how many units are they able to prep in that amount of time, and that will tell you how much labor it takes for that one unit, that one clamshell of salad mix to go out to your customer. So this is a tool for you to play around with. Once you have the data populated in those upper 2 tables, then it's going to calculate a gross profit margin for you. And so you'll need to enter the retail sales price of your product. And this is cheap salad mix, $2.99. And based on this very quick example where we just have a package and we have labor included, it costs us $1.94. I'm sorry, the profit is $1.94, and then our gross profit margin is 65%, which is pretty darn good. So as we're looking at gross profit margins, we ideally want to be above 50% for our gross profit margin if we're selling direct to consumer. If we're selling wholesale, we might see this a little bit less, maybe 30, 35%, because with wholesale, we know that that retailer needs to mark it up so they can also make some money. But this is a tool for you to play around with and start to get a sense of how COGS works. And you might have some aha moments looking at your own operation going, oh my gosh, I didn't realize that salad mix cost me so much. Or wow, tomatoes are really profitable. And this can help you make decisions on what you want to emphasize for upcoming seasons or how you want to streamline things. If you're realizing that, oh my goodness, this packaging that I'm using is so expensive per unit, I'd never even acknowledged it, maybe you want to look for alternative packaging. Or maybe your labor costs are sky high and you need to think about how do you improve the efficiency of your labor. So these types of exercises I mentioned, you should be doing them from every product, which is why there's 5 different tabs at the bottom. And feel free to duplicate the tabs and play around with it. But this is an example tool that can help you, with this assessment and, getting your feet wet in the COGS space. So so this is available on my website, so growingbrilliance.net. If you just scroll a little bit down to get the presentation materials and put in your name and email address, it'll go right to your inbox. And you might need to check your junk or your spam folder because every once in a while, or promotions, it gets funneled there. All right, so we talked about COGS. I think, get this back going. To sum up, COGS, when you do this cost of goods sold analysis, you'll be able to determine if your product is priced correctly. And if your gross margin is appropriate, are you making enough money off of this product? And are your individual supplies costs aligned with your total product COGS? Is there something that's staring at you? Maybe you went for the really fancy, beautiful labels because you're like, oh, this is gonna look so good on my market table. Customers are gonna just be so excited about this, label. And then you realize the label costs you 75 cents a piece and you're selling your product for $4 and you're going, oh, that's a big chunk of my cost of goods sold. So this is a really, objective way for you to look at the numbers and say, those labels, they're pretty, but guess what, guys? They're done. We're gonna go for more affordable labels. So that's the benefit of doing these calculations. And if you do have many, many products, maybe focus on the ones that you're selling the most of, because that's gonna have the most meaningful impact if you're able to adjust the cost of goods sold, or maybe you need to reprice your product on account of what you're learning from this exercise. So just to reflect in your current business about COGS, do you have the information to calculate COGS for your products? Do you know what it really costs to get that product to market? Sometimes we do, sometimes we don't. On the labor side, I think a lot of times if we ourselves are the labor and we're not paying ourselves, it's hard to quantify that. But I encourage you, even calculate your hours and pretend what it would cost if you were a hired person on your farm team, just to give yourself that perspective. If you start to grow and you do need to hire help, then you have at least that information of how it's going to reflect on the cost for getting that product to market. And you may need to keep some better records. So if you're looking at this and you're going, I bought packaging, but I don't know what it was for. You're like, yes, you do have it in your spreadsheet. You bought packaging from Uline and it's listed packaging, but you don't know if it was for your green beans or for your salad mix or for your tomatoes. This is where you can get a little bit more detail oriented and be more specific in your record keeping to say, this was packaging that was for tomatoes and for cucumbers. And I'm just making that makes no sense actually, but it is entirely possible you might have the same package used for different products. And in that case, you would want to say, 75% of this packaging was used for the tomatoes, 25% was used for cucumbers, and you can make that adjustment in your COGS calculation. But you need to be able to connect that packaging with what it was actually used for. If you're looking at this COGS thing, you're like, oh, dude, I already got this. I have all these records kept, I'm good. Then hey, this is your opportunity to take some time in the off season or as we're waiting for things to defrost in the spring. Do this analysis, do this assessment. You might be ripe for changing some of your pricing, or when you place that next order for supplies, you'll make some decisions on, to order something different. Or you can even perhaps order a smaller quantity now and check out the differences in some of the supplies if you're changing vendors. Because that may be a change. If you change your packaging for a lower cost packaging, perhaps you're compromising quality, and it's better to know that before you have oodles and oodles of produce to package. All right, so I'll pause here, see if there's any questions on COGS, either from the chat or from the room. Yeah, in the room.
With the CSA, how would you recommend incorporating the sales price if you have things going to market and those same products also being put into a CSA? How would you just divide the items per week evenly for the weekly price of the CSA box, or would you recommend kind of putting for similar values as they would sell at market? Or
That's a good question. And that gets to be a little bit trickier if you have produce that is going into a CSA sales channel and a direct-to-consumer farmers market channel. I would encourage you to think about them separately in terms of a cost of goods sold calculation, because your retail price that you're fetching is going to be different. And the CSA model has different benefits in terms of how you're obtaining the money from the customer and how you're able to move product depending on your CSA model. So CSAs get a little bit trickier when we do cost of goods sold calculations, because if you have a standard box that has whatever vegetables and fruit you select as a producer versus the free choice CSA model. So let's say it is, your consumer gets the box every week, and guess what? If it's jalapeno pepper season, they got a lot of jalapeno peppers. That makes it a little bit more variable, because the value of the contents of that box are going to change from week to week. But you can do your assessment on your cost of goods sold for your direct-to-consumer sales at more of a retail point of sale, like a farmer's market, pretty straightforward. On the CSA side of things, you might want to consider, what is the weekly value of each box? And then using that cost of goods sold assessment from your direct-to-consumer sales, consider how much value of lettuce, how much value of Swiss chard, how much value of jalapeno peppers is going into that box. And you may find that in some cases, during some parts of the season, the profit margin of that CSA box is not what you'd think it would be, because you are maybe inundated with certain crops, but you're able to move them, and maybe you have very satisfied customers because your customer wanted to make salsa and now they have all these jalapeno peppers. So the CSA model is a little bit more challenging to do this very objective assessment, but I would leverage your retail sales price as kind of a barometer, and consider that your CSA contents might be essentially kind of, I'll put it on quotes, on sale for your CSA customer certain times of the year, because you just got to move stuff. And not everybody wants 5 bunches of Swiss chard, but guess what? It's Swiss chard week, and make some quiche. It's going to be delicious. I hope does that make sense?
yeah.
Good, good. Were there any questions in the chat? Oh, yeah.
I would also say that for the CSA model, answer your question, is that I ran one for many years. I have many one right now. It's also averaged out over the amount of weeks that you're using. You might have 16 or 20 deliveries. And so you can average out your cost if you keep accurate records. And you're always going to have a glut of vegetables, especially in certain seasons like tomatoes. So you let people know ahead of time what they're going to receive in a week or two, so they can plan to either preserve or make sauce. Like she said, make quiche, things like that. It helps you average out over the course of the whole entire season.
Yeah, thanks for sharing that. So the mention was to average out the cost of the CSA throughout the whole season, or in terms of cost of goods sold. And as you look at your historical sales data for that year, if you're able to track the amount of volume you produce and harvest, and you know that X number of pounds went direct to consumer and Y number of pounds went to your CSA, then retroactively you can do those calculations and see how did you net out in terms of the inputs into that CSA box. So that's another way to think of it. Good.
I have a question. Can you hear me?
Yes, go ahead.
Yeah. So if you're trying to calculate this, and you're including something like labor in your calculation, and you've got a product like tomatoes that has a really long harvest season, You know, a lot of, you know, that, you know, the first bit of that labor of putting the plant into the ground and, you know, getting it fertilized and getting it all set up, and then it just kind of keeps going throughout the season. The labor cost of the tomato at the end of the season is going to be relatively less than the labor cost at the beginning. How do you calculate for that, or is that too much into the minutia?
No, that's a great question to calculate that labor across the entire season. So as we look at cost of goods sold, and especially for produce, things that take many months to go from seed to actual sellable product, you would want to have the cumulative labor hours from planting that seed to weeding the tomatoes to maybe pruning some of the branches to then harvesting. And that would, add up over the course of many, many months. So a cost of goods sold calculation isn't done just in 1 week, 1 week's amount of time commitment. It's, looking at that whole season, especially when you have, longer type growing seasons like tomatoes. Lettuce obviously would be a little bit shorter season. So it is harder to calculate the labor on crops that grow for many months, especially because when you have staff out in the field or you yourself are out in the field, you're not typically out there just to weed the tomatoes. You're also out there to weed, the herb area, and you're gonna take a look at how your potatoes are doing, and you're out there for 5 hours, and oh gosh, I don't know how much time I actually spent with the tomatoes. So this is where you can make that decision. How important is it for you to nail down the exact labor value? And there's apps that you can use to track your time on that. And if you can remember to clock in and clock out in the tomato field, that will be valuable data, especially as you start thinking about having hired staff as part of your operation, because then you actually see the cash flow leaving when you write paychecks every 2 weeks for your staff. Yeah, good question, good question.
Okay, and I guess the follow-up to that is, across the season, there's going to be product that isn't sold. Does the amount of product that's produced that doesn't get sold also weigh into this?
Another good question. So yes, you might have either losses due to, damage, or perhaps it's just it's surplus that you're not able to sell through your typical sales channels. Maybe you're donating it instead. Maybe it, goes to animal feed or compost. What we're looking at here is our best evaluation of what our average inputs are for that crop, including crops that are lost and not being able to realize the retail value. And I say that because it's hard to say, well, we know that 10% is going to get lost, so actually I'm going to cut my cost of goods sold down by 10%. But that's not really fair, because you're out there weeding those tomatoes and harvesting those tomatoes, and maybe they don't all get out to realize that dollar. But it's something where you'll have to accommodate for all the inputs, regardless of whether or not you're going to see that retail transaction.
Thank you.
Good. All right. Great questions. So we'll move on to the second part of our business audit, and this is evaluating sales and distribution channels. So COGS was looking at how much does it cost to get our product to the farmer's market table or to the wholesale delivery truck. Then we had kind of dusted off our hands and said, we're done with COGS. We've got it to the farmer's market table. We're done. But what about that next step of actually selling the product? And this is true whether you're doing wholesale, CSA, farmer's market, farm stand. You're going to need to evaluate how much inputs is it taking to get that transaction to occur. So your table's all set up with all your lovely produce, but how much does it cost for you to be there and to stand around sometimes for 4 or 5 hours sweating your face off in July? So let's dive into this a little bit. Thinking first about how do you sell your products? And if you're selling direct to consumer, perhaps you're selling at a farmer's market. Maybe you have a farm stand, a roadside stand at your property. Maybe you're selling through a CSA program, or perhaps you have online sales where people are ordering online and they're just doing curbside pickup. Perhaps you're more focused on wholesale sales, and this might be an opportunity that you're directly distributing to different wholesale accounts, restaurants, supermarkets, other farm stands or farm stores, or maybe you're selling into a third-party distribution, and Zone 7 is an example of that, where they aggregate and then redistribute produce and other agricultural products. So just thinking about how you sell your products is important. Each of these is going to result in a different cost of, that actual transaction. So as we think of this, I'm going to use the farmer's market example because I think a lot of us operate in a farmer's market setting. We also can relate this very easily to a farm stand setting, and we're going to be taking out a couple of expenses there because we don't typically have to pay a table fee to be at the end of our driveway, right? But there is, some expenses going into that. So if we take a farmer's market example, and let's say, I have a great person who I'm paying to work the farmer's market. In today's competitive wages, I have to pay that person $20 an hour. And by the time they load up the truck, drive to the farmer's market, get everything set up, stand there for 4 hours and come home, they've now spent 7 hours on my payroll to sell my wares. Well, that is not that much that I'm paying for that person to be at the farmer's market. When I add in my taxes and insurance, it's costing me $172 to have that person there. I can manage that. I do pretty well at the farmer's market. My table fee for the farmer's market, $750 for the 25-week season. That comes out to $30 per day. That's pretty average when we look at the farmer's market fees around here. Gas to drive to the market, that's 4 gallons of gas, 2 gallons each way. Driving the farm truck, not the most fuel efficient vehicle. At $3 a gallon, we're looking at $12 of gas per market day. And then I did have to get a Department of Health license for being at that market, but it was pretty affordable. And when I break it down for all the market days, it's only $3 a day that I'm there. Oh, my farmer's market. Dude, I'm gonna be making bank at the farmer's market. It only cost me $217 to be at the farmer's market. I can easily sell $217 worth of my product, easy. Okay, well, obviously we all should be selling at farmers markets, right? Wait, it can't be that easy. So if we do those calculations just on the back of an envelope, it makes farmers markets seem like they're really, really, really profitable. But if you get into the nitty gritty and think about what you actually need to have a profitable business overall, we have to start to think about the other hidden costs that are associated with those sales. We talked about cost of goods sold, right? So all of my revenue that I'm generating at the farmer's market, if I originally thought, I just have to generate $217 of sales, then I'm good, I've covered my costs. Oh, but wait, I forgot that it actually costs money to make my products. That cost of goods sold needs to be factored in there. So we can't just cover our daily expenses of being at a farmer's market. We really need to evaluate how much does it cost, not only for us to get there physically and sell the product, but how much did it cost to make that product, to produce it, to get it there? And then also, how much did it cost to keep our lights on at the farm, our operating expenses? So let's first look at how much it costs for our product. So the revenue that you generate at the farmer's market, it's not all profit. Profit is what's left over after you've covered your expenses, after you've addressed the cost of goods sold. So we have to factor in the cost of goods sold to all of our sales at the farmer's market. So it's not just pure cash that we're getting. We have to adjust it for how much it costs to make those products that we sold. So in our cost of goods sold, I'm suggesting that maybe our cost of goods sold for a particular product is 35%. Which means we have a profit margin of 65%, which is a healthy retail profit margin. If my sales are just meeting the market expenses at $217, I actually need to bump up those total sales to cover my cost of goods sold to be $334 at the farmer's market. You might say, oh, that's not so bad. That's like another $117. We can manage that. $334 day at the farmer's market, yeah, we can do that. And that will cover your cost of goods sold, that will cover your staff and the time they're there and their market fee, but it's not gonna pay your electricity bill. And it's not gonna cover your business insurance or put gas in the tractors or things like that. The operating expenses are another factor that we need to consider when we're looking at how valuable is that sales channel for us. So our next consideration when we look at how our sales channel is generating revenue is considering how can that sales channel support our operating expenses. So we've demonstrated our sales channel at $217 of sales can support us being there, and at $334 of sales, now we've covered our cost of goods sold and being there, but we want to keep the lights on the farm. And this is going beyond the scope of our discussion of understanding your operating expenses, but hopefully you have a sense of how much it costs to keep the electricity bill paid, keep your propane tanks full, keep your gas tanks full on your tractors, fix the tractors that break. Those are all considered operating expenses that account for, in some cases, fair amount of the total revenue. In this example, I'm using an example of 30% of total revenues covered by the operating expenses. So if we think about, the market sales not only have to cover the cost of us being there, the cost of goods sold, but now we need to be making extra to keep the lights on. Our sales goal for being at that farmer's market has gone up from $200 and some to $300 and some to now we're looking at maybe $600. So the second worksheet that I have available for you is a way to calculate what's your sales target if you're operating in a certain sales channel, and the farmer's market example is what we're using here. So in the spreadsheet, I'll actually pull the spreadsheet up. This again is downloadable from my website. In the spreadsheet, just similar to the COGS one, you can fill in the yellow cells. You can add your sales target of what you think you should be making at the farmer's market. If you can calculate your daily fixed expenses, like I showed in the pie graph, you can put that in there. And then if you know your COGS and what your operating expenses are, you can add those percentages. This will then calculate what it costs for you to be at that venue. That's the orange cell at the bottom. And if that cost is not aligned with your sales target, you're going to see a number that's in parentheses, meaning it's negative. And if your cost is less than what your sales target is, then you'll see a positive number like we have here. So this allows you to tinker around a little bit. The thing that gets tricky about these sales targets is that as your sales increase, your cost of goods sold as a dollar amount increases because you're selling more. So it's, you can't just say, oh, $200 for cost of goods sold, that's all I'm going to need to put in there. No, it's always going to proportionally increase as your sales go up because you've sold more products, and bravo. I mean, you should be excited about that. But that's why this type of calculator can be useful. So on my slide, I have two different examples to show you how this can net out if you wanted to tinker around with these sales channels and figuring out what's your sweet spot, what's the minimum sales number you need to make at that particular venue to make it worth your time. And it's not just covering the cost of the table fee and the staff being there and your gas. It's not just covering that plus COGS, it's also making sure you can keep your lights on. So for this example, I put in a sales target. I was like, I think I should be able to make $500 at this market. That sounds pretty comfortable. And after I did all the calculation, I realized the total costs of being there as I factor in my OPEX, I'm $42 negative. So I've actually lost money if I only sold $500 worth of product at that market. But if I can get my sales jamming a little bit more, get my sales target up to $650, now all of a sudden I'm in a spot where my total cost for that market is just under $640, so I've come out $10 ahead. Now, when I say $10 ahead, this means this would be your potential profit because you're paying bills in all these other lines. This is an in-depth analysis of your sales channels that a lot of folks don't take the time to do. And this is where you find people getting really frustrated about their effort being at farmers markets because they don't realize how much cost goes into being there, especially when you need to be generating extra revenue to cover those operating expenses that you're incurring just by existing as a farm operation. And I think the running joke when I first started was people would say at the farmer's market, well, I made my table fee back. And at first I was like, oh, awesome. Great. You made your table fee back. Me too. And then I started thinking like, that's not so good. I need to be making more than my table fee back, like a lot more than my table fee back. So I'll wrap up the sales channel analysis and then we'll take some questions. So, if you want to do this, thoughtfully and carefully for each sales channel that you have, farmer's market or otherwise, you can populate what is the cost to actually show up. That's the one component. And then your cost of goods sold is going to be a second component. And you may need to just take an average of cost of goods sold. If you know that your cost of goods sold ranges from 15% to 40%, you'll have to take your best guess because sometimes it gets to be a little too granular to do every single item. But at least we'll get you in the ballpark of where you need to be sales-wise. And, cost per day for a farmer's market of $620, for some operations, this may not be attainable. And it may be because of the value of your product. Maybe you're just not able to generate enough sales because it doesn't, you have to sell a lot of pounds of tomatoes to make that amount. Or maybe the market doesn't attract enough customers. And you would need people buying $40 worth of produce every single transaction in order to realize this $620. So there's some, things that you can sort of sense check on. Is your sales goal to essentially break even and include those operating expenses attainable or not? And if you look at it and say it's not, then it's time to reevaluate whether this is a sales channel that you want to continue for the next year. All right. I will pause there and see if there's any questions. Yeah.
I have more of a comment.
Yeah.
Being in business is awesome. So because of these operating expenses, sometimes as a small business owner, you can use some of those operating expenses might seem high. At the same time, we're actually using them for our personal business, ourselves also. Maybe we're eating some of the food from the farm. So there are other benefits than just direct money coming in. And then, because if you look at it with only cash value, which we have to bring in the cash value. Otherwise you're out of business. But there are some other benefits to having a farm too and growing things and having things of value that you are using yourself and your family. And also some of the vehicles that you're using many times as your personal vehicle.
100%.
Yeah, sometimes the operating expenses could be seen very high, and they are. I know a guy who actually destroyed his whole entire pickup truck because of his farming, he had to go get a new truck. But besides that, there's some other, it seems like farmers markets are hard. I know people who, I've never done one, but I know people who talk about it. And they're not easy, you have to make that table fee.
Right.
A lot involved, getting up early, also the profit, and for yourself as a farmer to bring home. So that $600 might have to be like $900 to $1,000 now.
Yeah.
Otherwise, you're just paying bills for someone else to make, So there's a lot going on. It's a very good breakdown you did there.
Well, thank you. And I think you make a great comment. And, in the agricultural sector, it's really interesting to see where our intersections are with personal and business. And for many of us, even if we have an LLC, all of our taxes get filed all bundled up as one. And it gets, although my accountant can delineate what goes on Schedule F and what is personal, it does get a little bit more muddy. And obviously there are benefits of, being in agriculture because you're making food. And, that food might be also going into your refrigerator and nourishing you, and also maybe the health benefits of being outside in the fresh air and all that. So there are many reasons why we want to farm. And I should mention, we do 4 farmers markets, and I'm totally not dinging farmers markets, but I wanted to make sure that we were thinking about farmers markets outside of the panacea of, we're out with the community and I love meeting people to bring my fresh food. And yes, that's so true. But if you're not, at the end of the day, making enough money to support your business, you really got to reevaluate why you're there. And if you're there for the social reason and you're okay not covering all your bills, by all means, go do it. And this is, in our goat dairy, this is the first year that we've had more other people at markets than us, my husband and myself, and that's a weird transition. And I will admit, I miss the sense of community, not only with the customers, but also the other vendors. And, commiserating when it's 95 degrees and you're like suffering from dehydration and everyone's like, oh my gosh, it's so hot. And then you're freezing in December and, it's not even above, 32 and everyone's going, remember in July? So yeah, there's things that do not have monetary value that come along with agriculture for sure.
That's how I was trying to find.
Yes. Oh, there are so many things that you can't put a price tag on, which is why many of us are in agriculture. All right, did we have any questions that popped up in the chat? All right. Well, we will move on to our next section. And this is now moving into thinking about our sales growth goals. So as we've gone through this business audit journey, we've talked about cost of goods sold and understanding what it actually costs to bring our product to market. We've talked about assessing our sales channels and how much it costs for us to actually sell that product, which is the next stage. And now maybe we're, thinking, I want to grow my business. I want to expand what we're offering and make, I want to make a little bit more money. I want to maybe explore some new products, maybe cultivate some new varieties. Maybe I want to add livestock or eggs or something else to our portfolio. So we want to think of our sales growth goals both from the aspirational perspective, but also practical. And it's really easy to get just kind of dreamy-eyed, especially in the winter months as we're exploring things, watching YouTube videos, learning about like, oh my gosh, we could do this at our farm. This sounds so cool. But to bring it back down and ground it in reality, and you might be looking at what's your current revenue for your farm at some value, and then what's your future revenue look like? Maybe it's next year, maybe it's 3 years from now, but what your target revenue is. How are you going to make that jump to increase the revenue? And there's many different ways you could do this. It might be something as simple as you're just going to raise your prices. So you did your cost of goods sold analysis, and maybe you also did a competitive market analysis and you started looking around like, oh, what's everyone else selling their salad mix for? And you realize that, oh gosh, I could add another $2 to my product and be like still very competitive. So you can achieve the sales goal without even increasing production by a price increase. Now, will a consumer accept that in today's era with all of our food inflation? Is hard to know, because food is still more expensive than it was a few years ago. But that's the most straightforward way to generate more revenue without doing more production, is to increase price. But maybe you're going to increase your production volume, and so that means you're going to grow more of something, raise more of something. It's important to consider, as you're increasing that production volume, how are the logistics going to sort out? If you're going to plant an extra acre of tomatoes, how's it going to look when it's harvest time? Do you have enough crates to harvest those tomatoes? Where are you going to put those tomatoes? How are you going to get those tomatoes to your sales outlets? These are some things that sometimes we don't think about when we're ordering seeds and saying, I got an extra acre, I'm going to put the tomatoes in there. Like, fast forward a little bit into July and August and think about how you're going to handle that extra produce that's now coming in peak season, all of it, of course, because that's how it works. And are you prepared to manage that? And I'll just share a little story about our goat dairy where I'm teaching this, and we made a little flub in May. So our dairy volume increased about 30% because we added more milking goats to the herd this past year. And as we were ramping up production and we were going to bottle our first big batch of pasteurized bottled milk, I started looking at the gallons of milk that were going to get bottled and calculating how many quart bottles that was. And I go, I don't think we have enough refrigerator space. And it was like panic at the beginning of May, where my fridge was already full of all the cheese we made that week. It was Friday. We hadn't started any of our market sales yet for the weekend. And I was going to have 84 quarts of milk that needed to go in a refrigerator. So needless to say, my husband and business partner took the truck down to Philadelphia to Restaurant Equippers and bought the floor model commercial fridge, got it in the back of the truck and drove it home, and we unloaded that behemoth of a fridge and got it started up and running. And it was like, oh, good. But somebody here did not plan ahead and did not think about the logistics of having more milk. The cheese fit in the refrigerator just fine. The quart bottles of milk take up a lot more space than little packages of cheese. And that was our aha moment of like, wow, we increased production, and this is going to be a season to remember. And it was a good dairy season, and we're all very tired now. But that's just an example where we didn't plan ahead, and it was a panic to find. We had to have a commercial fridge because we're a commercial operation. I can't just go to Home Depot and buy a nice GE fridge. It has to be NSF rated. It needs to have the appropriate temperature controls for storing dairy. Oh my gosh, wow. And because of the urgency, we did not get it on sale or anything like that. And had I planned ahead and was looking at the sales in February, maybe I would have had a beautiful commercial fridge already in place without a panic. But I didn't, and I already knew how many goats were going to make milk. But these little gaps in your lapses in your judgment, I don't know what we want to call it, or just like the duh. It was truly a panic, and thank goodness we were able to get the floor model fridge back to the farm on that day. So fourthly, point of sale growth. So if you grow more tomatoes or you have more bottled goat's milk, whatever your production increase is, make sure that you know how you're going to sell that. And, are you adding another sales channel? Are you going to have a significant marketing campaign at your existing sales channels to drive customers there? If you're in a direct consumer sales experience, whether it's a farm stand or a farmer's market, you may be, just kind of limited on how many people are attracted to that particular venue. And how are you able to influence it? You may have great influence. You may not have great influence. And that's something important to consider. You can increase your point of sales growth by having more customer transactions, so getting more customers to that sales venue, or you can increase your point of sales growth by adding increasing the amount per transaction. So instead of a customer coming to buy $15 worth of product, if you can get them to buy $20 worth of product, then you're going to be able to start to achieve some of these revenue goals. And then, the scalability of your current infrastructure, this kind of goes along with the fridge story. But, if you think carefully on all the different steps to producing your products, there might be a point at which your current infrastructure, your equipment, your storage space, your packaging space may not be sufficient for the growth that you're trying to achieve. And you may be looking at investing in new equipment to be able to accommodate that. And I guess just another example from our dairy, we currently use a milk bottle filler that is highly manual in the sense that a person is moving the bottles through and pushing the button to fill the milk and pushing the button to stop the milk and moving the bottle along and capping it. It takes about a minute to fill each quart bottle of milk. But if we wanted to invest in an automatic bottle filler, we could be bottling 7 to 8 bottles of milk per minute. And this is a small bottle filler. This is not like one that's going to be filling bowl and basket milk. It's, from ShopRite. This is still micro dairy scale. So the question is, if we want to increase our production volume and our production efficiency, what's then the cost of investing in that equipment to make it go faster so we can be more efficient with that? So breaking it down, when we think about creating our sales goals, that price increase component is something that I think is pretty sensitive for most consumers right now as we're experiencing this food inflation. And as we're hearing about some maybe upcoming tariffs for imported foods from Canada and Mexico, that is likely going to change the supermarket bills for our customers. Now, are they going to be willing to pay a little bit more from your farm stand or to your CSA? It's hard to know. But you can do some market assessment and look at what other comparative sellers are offering for a comparative product. And I think this is good to do every couple of years. Take a view, look at your competition, and these may also be your friends too. What are they selling their produce for? For us in the dairy space, what are the other artisan on-farm made cheeses selling for per pound? And that can give us kind of a barometer for whether our price point is within a reasonable range or maybe it's way too low or way too high. If you've looked at your COGS and you identified that there are certain components that are going into that cost of goods sold that are really not proportionally appropriate, you can tune in the COGS a little bit and decide whether or not that price increase is justified, or maybe you're actually going to do something to improve your cost of goods sold so you don't have to increase the price. But you maybe want to just think about when you changed your prices last, if you've been in business for a little while. If you've weathered the pandemic and inflation and hardly increased your prices, you may go through this analysis and realize it's about time. And my personal experience is, if you increase prices and you explain to your customers what's happened, your good customers are going to typically say, all right, I'll pay an extra $1. And the customers, there may be one or two that kind of turn their nose up and say, no thanks, but it is what it is. In many cases, when we're in the small agricultural sector, it's hard to educate consumers on what it really costs to bring something to market. But the more we can do that as an industry, I think the better off we are for being able to justify our prices. So with production increases, if you're going to grow more acres of tomatoes or expand your lettuce or microgreens, the obvious question is, do you have space? And I think this is something that we can do a quick assessment and decide yes or no. And maybe you're cannibalizing space from another crop to focus on something that's a little bit more profitable or has better sales. When you produce more, you're going to need more labor. And that comes without saying. So do you have that time, that staff to produce more, whether it's you or somebody who works for you? I mentioned with the milk bottling, if you don't have the right infrastructure, you might need to invest in something that's more efficient. And this could be, ranging from cultivation equipment for your tractor to wash and pack stations for produce that's going out to the retail sales. And then you need to think about the scalability of your increases, because this is all kind of compounding on itself. Not only the space and the staff and the infrastructure, but as this all aggregates, is this something that you're really willing to take on? Because growing is, I like to think of it as when you're in middle school. Remember that when you're body was growing and evolving and things got to be real awkward for a while and then you kind of got the hang of it. This is really true in your business. As you grow, there's going to be some awkward and really challenging parts of this, but you need to be thinking into the future as best you can to anticipate where those awkward parts are going to occur. Then thinking about logistics and storage, adequate storage for the increased inventory is really important, especially if you know that you're going to have bigger peak production at a certain time of year where, you know, everything is coming into season at all the same time. You know, I'm thinking end of July, beginning of August. Where are you going to put all this produce? And if you're increasing production of multiple crops, and even if you think, oh, they should be staggered in terms of their harvest season, we all know that sometimes it doesn't work out that way. And we're inundated and trying to figure out where we're putting all this. So even if you don't know exactly where the storage would be, think about what your backup plan is. And how are you going to be able to keep this, you know, in the post-harvest state before it gets out to sale? Then the transportation is something we often overlook. So if you're already filling your farm truck completely full of produce and going to the farmer's market, what's going to happen if you increase the amount of produce you're taking to the farmer's market? Is it going to sit in the front seat with you? Maybe it already is. So think about how you're going to address the transportation if you're needing to move your produce from your farm to your point of sale. And then as we all experience, you might have extra inventory at the end of the sales week. You know, most of us we're seeing sales Friday through Sunday as our peak sales time. What happens if you have extra? What's your backup plan for moving that? You know, do you have a relationship with a food bank where you can make a donation? Do you have, you know, wholesale accounts that might be interested in taking discounted product for processing, you know, restaurant or a commercial kitchen like that? So think about that, because as you grow and you need to keep moving that inventory and have that turnover, you need to make sure that it's moving out of your storage space, even if it doesn't get sold. Then the point of sale growth, I talked about this a little bit. You know, when we have a sales channel where we're relying on customers to come and make purchases, we are beholden to those customers to show up. And in a farmer's market setting, we can put the responsibility on the farmer's market manager to say, you need to promote this market and get the community engaged and aware. And we can also take responsibility as a producer through our own channels, whether it's our website, social media, or email. But if you're going to experience point of sale growth, which is typically needed if you're increasing production, you're going to need to often increase the number of transactions you have on that given day. So how are you going to drive more customers to that point of sale? Are you going to offer promotions? Are you going to do more targeted marketing? And you know, we're not getting into the cost of marketing here, but you know, that's going to take time and perhaps money. How can you increase the average transaction price? So is there a way that you can get somebody to spend more at your stand or at your market table than they would otherwise be spending? So maybe your production, you know, increases would be through diversification. That's, you know, you'd be adding some new desirable products. Maybe you're going to start offering heritage green beans. I'm just making that up, but you know, it's something that's intriguing and someone's like, oh sure, I'll buy that for an extra $6 because they've never seen it before. So think about that, you know, in your strategy if you're wanting to increase production, that are there ways that you can increase that average transaction price for that customer? And then, you know, if you're looking at keeping this same number of venues, the sales channels, and you know, you're not able to increase the number of transactions, or you can't really think about increasing the average price of the transaction, maybe you have to add a different sales channel. And it doesn't necessarily have to be more of the same, but you might want to consider, you know, is there opportunity for wholesale sales? Maybe you want to try a subscription CSA type approach, or there's another farmer's market or a farm stand. So maybe, you know, you just have to add one more point of sale in order to be able to move all the product that you've started growing. And then lastly, the scalability of your endeavor. Think about, you know, as you increase production, what you think the feasibility of scaling each of the areas you want to grow. Is it something that's super easy? That's, you know, you're already growing amazing tomatoes and you're just going to add an extra acre. You already have the outlets for it because you sell out every season, no big deal. Or is it going to be really hard because you're exploring, you know, new varieties of a crop that you've never tried on your property, and maybe the bugs and the mold and the mildew are just going to decimate them. So it's going to be a test and learn. So think about the feasibility and then rank the importance of scaling in each of those areas. So if you don't have a perfect scenario, what would you prioritize? Because a lot of times we get, I don't know, shiny object syndrome where everything looks interesting. We want to try all these new things in our operation. It's important to scale appropriately and really prioritize where you feel you're going to be most successful. So it may be something that's not the easiest, but has the opportunity to generate the most value. And if your scaling requires a financial investment before revenue can be generated, how are you going to float that? So if you need to buy cultivation equipment in the spring in order to increase production, that's going to be, months probably before you're going to realize the revenues from that crop. How are you going to finance that increase, that infrastructure investment? And there's ways to do that, but just think through, you'll see that return on investment in July or August, but you have to put that money up for the equipment in maybe February or March. So plan for that. All right. So I will pause there briefly before we get to our last section. Any questions? Are we okay on the chat? We're good on the chat. Okay. We're rolling right on time. This is great because then we'll have a little time at the very end for open forum. So to end our discussion today, I wanted to address unplanned occurrences. So we talked a lot about like the things that we know based on data, the things we can plan for, and we put our best foot forward a lot of times and try and make everything happen to the best of our abilities. But guess what? There are different things that occur in life, environmental challenges, heavy rainfall, hurricanes, drought. We might have other issues such as, tractor breaks down or, van that we go to the market breaks down. How are we going to be able to adapt to that? Because especially in agriculture, most of us have perishable products. And our inability to sell even at one sales channel for one weekend could be debilitating for our business. So on the left side, I have a couple of example categories of unplanned occurrences. So the first one is inventory constraints. So what happens if you've lost a whole bunch of your product for whatever reason? Maybe we had excessive rainfall and your tomatoes all cracked. And now they're not suitable for retail sale because no consumer wants to buy a cracked tomato, right? We know they still taste fine, but once they're ugly, consumers are like, no. So, we have an inventory constraint, we've had damage to crops, and that's, it's typically going to result in this drop in revenue, and it's going to be temporary where we might be able to rebound by, being able to sell product the week after that hasn't been damaged, but in the interim, we have this drop in revenue. In order to manage that appropriately, you should be thinking about what expenses can be discretionary at that point in time. So what can you do with your farm spending to just sort of put a pause on purchases that are not necessary? At the end of the day, you may still be able to make those purchases, but as we look at week by week and being able to pay our bills, because we have that drop in revenue, we may need to pivot and put a pause on some of our spending. If we have an unplanned sales decrease in the sense that we got revenue or we got inventory, we're ready to sell it, our tomatoes are ready to go to market, but guess what? Hurricane Hank has barreled towards New Jersey and the farmer's market has closed for the day because we're getting torrential winds and rain. Okay, all those tomatoes are sitting ready to sell. How are we going to move those? So we're going to also experience a temporary drop in revenue because we don't have that farmer's market channel. But there's a little silver lining here. There may be alternative sales channels that you can leverage. And so this is where it's important to have that kind of backup network I'll talk about next. Lastly, unexpected expenses. So this is, a situation, your van breaks down, the tractor needs a repair, significant things that are not like, $50, it's maybe $500 or $5,000. How do you buffer that? Because you weren't planning to repair the van, but you need that van to be able to get to the farmer's market, so it has to get repaired in a timely manner. This is where you'd want to lean on your ability to do short-term revenue drivers. What are ways that you can increase revenues through your customer base to get that little cash infusion to help cover the cost of that unexpected expense? Maybe it's a sale, for example. Maybe it's extra promotion, or you do an on-farm event where people can come and tour your farm at no cost, and then, hey, guess what? They're also going to buy some produce on their way out because they think that your farm's pretty cool. And as someone who does a lot of agritourism, I'll say that you probably don't want your first agritourism event to be just like off the cuff, our van is broken, come visit our farm. But think of this as ways that you can have in your back pocket of what happens if I have a need for extra revenue and I don't know where this revenue is coming from, but I have product to sell. I just don't know how I'm going to sell it. And that's an option. And then, as I mentioned with the inventory constraints, manage your routine expenses accordingly. So what are the discretionary things that you can kind of put a pause on to then be able to put those expenditures towards that, bigger unplanned expense. So two things that I recommend that are going to help you manage these unplanned occurrences is consider establishing a line of credit with your financial institution for your business. If you're very small and you do own a property, you might be able to secure a home equity line of credit that would be a backup. I say that just with a little caution that, it is better to keep business expenses in a very separate category. But if this is a way you would have to access a line of credit, a home equity line may be suitable. Otherwise, lenders like Farm Credit East may be able to offer a line of credit that is typically a better interest rate than a credit card, and you can draw on it and then pay back in installments as you would a credit card bill. But it sits there in waiting for those emergencies where that I got to pay $2,000 to get the brakes repaired on the van. I don't know how I'm going to cover that, and I sure don't want that balance sitting on the credit card for several months. The second thing I suggest is creating a supportive network. And that's not only among your customer community, but also among other farmers. It's amazing how much we face the same challenges as a farming community. And the more we talk about our challenges and our successes, the more we realize that, hey, we actually are kind of all in it together in an agricultural community. So when you have an unplanned occurrence, and if you need, to lean on another farm to help sell products on your behalf, there's a good chance that they might say yes, believe it or not. Although we may view ourselves as competitors with other farms, oftentimes we recognize our community ties are stronger than our competition ties. So the levers you can pull for these unplanned occurrences, wanted to, just sort of highlight a few of these. Think about your alternative sales outlets. So when you have that excess inventory, let's say the farmer's market is canceled from Hurricane Hank, how else could you sell that? So do you have a short list of wholesale accounts that might be interested in buying your product? So have that list already kind of nurtured, and be thinking of chefs or boutique grocery stores that might be interested in your product. So in that clutch situation, you have a contact there. There might be pop-up opportunities where you could get a table just for one day at a farmer's market. Sometimes these are a little bit more challenging if you need Department of Health licensing, but think about what, where else might you want to just like pop in if you needed to have another revenue or sales channel. Then also, a thing that we've actually done personally with our goat dairy is, work with CSA farms as offering an add-on to their CSA for just that week's purchase. So when customers would come to the CSA location to get their vegetable box, they could also buy a little jar of cheese. Hey. And that's a way for us to move inventory, and there may be ways to do this on consignment, so your fellow farmer is not taking a risk of buying inventory from you, but maybe you're able to move a little bit of that. I mentioned deferrable expenses, so always think about your expenses critically. What could wait another week to buy? And one thing that we've been talking about is fixing the suspension on one of our pickup trucks, because when we get 2,000 pounds of goat feed in the back of this pickup truck, it is a low rider pickup truck. So we need to boost up that suspension a little bit. The acknowledgement was, we're not going to have another goat food order until probably the end of January. As I'm closing out my books for 2024, I really don't need any more expenses on the books. Let's just wait. We'll order these parts in January and fix the truck then. Because honestly, no one's going to fix the truck between now and the end of the month anyway. So thinking about like what can be deferred, we'll still fix the truck, but we're just not going to buy the parts right now and fix it right now. Think about your approaches for promoting your products. What are your ways to get that megaphone out Do you have a network that can reach other audiences? So this might be through some of the local agricultural promotion groups. Discover Central New Jersey has been pretty prominent in this area, 10579 Trail in Hunterdon County. There may be similars in your areas, but think about your network for promotion and how could you tap into those ways to get the word out if you need to have like a flash sale to generate revenue to fix that truck. And then nurturing your community, not only your customers, but your fellow farmers. And a personal example from us and our dairy farm, a couple of years ago, we decided we needed to buy our own ultrasound machine for being able to do pregnancy imaging. And it was coming at a time of year where revenues were really low. We don't make a lot of farm income between January and April when our goats are not producing milk. So I put it out there to our email list and on our website. I said, hey, we want to buy an ultrasound machine. I'm putting all of our goat's milk soap on sale for $5 a bar. You can order it online, you can pick it up at the farm, or I'll ship it to you for $5 flat rate. Yeah, help us out. Oh my gosh, the community response was insane. And I just said I wanted to buy an ultrasound machine. I mean, I guess that's a weird thing to ask for, but you know, I felt a little vulnerable saying I need help buying this. But we knew we had some kind of dicey pregnancies in the works. And although we had a vet to rely on, it was really difficult to have enough, routine imaging to know how things were going with those pregnancies. So needless to say, that simple ask, and we did do a promotion. I said, look, instead of $6 a bar, I'll sell you the soap for $5 a bar. Oh, it was absolutely bonkers. We packed almost 100 orders that week. And guess what? We were able to buy our ultrasound machine. So never underestimate the power of your community and what your customers may show up to do for you when you actually put it out there that you need a little bit of help. And these unplanned occurrences, that's when you need a little help. So I think that is really a wrap. And this is great timing. We have some time for questions. So thinking about 2025 and making it a profitable farming year, as you walk away from this workshop and you maybe want to tinker with this over the next few weeks, revisit that self-assessment. Reflect on your own business and where you stand right now. I like to say, I have a typo here. Dating is not knowledge, but data, we'll change that to an A. Data equals knowledge equals power. I don't know, maybe if you're dating, you also can get knowledge and power, but data, the numbers is knowledge and power. So think about what you might need to improve for 2025 if you need to have better data keeping. And if you're doing pretty well in 2024, use that data to make informed decisions. Know your numbers, look at your cost of goods sold, determine if you need to justify a price increase, but also if you've already done cost of goods sold exercise, maybe it was a couple years ago, revisit it. You would be surprised how much stuff has increased in terms of, supply costs and freight. Freight is the one that is still blowing my mind, how much we pay for freight on some things. And also get to know your point of sale data. How much are you actually generating in terms of your sales at your different sales channels like farmers markets? And then lastly, have a backup plan. Think about all the bad things that could happen. I know it's doom and gloom, but also think about the ways that you can get yourself out of the lurch. And you'd be surprised at how easy it might be to be able to turn a really bad situation into something that's more positive. So with that, I will end there. I'll be happy to take questions. And before I forget, if this is something that you're interested in exploring further, in January for 3 weeks, I'll be offering a deep dive through a 3-workshop series where we're going to get into details of this and be reflecting on your own business. You can sign up via my website if you're interested. And through Christmas, if you want to give yourself a gift, you can save $20 for the registration. And that's if you'd like to learn more about planning for profit. So I will open it up now for questions for the last 6 or 7 minutes. So from the room or from online. Yeah.
Well, then the question is actually a comment about marketing. So I put an ad on Facebook Marketplace, and I tell you, I had some extra. We had just put the farm stand up, and I had a lot of people come on over, and I sold about 30 pounds of garlic.
Awesome.
Like just from the Facebook Market ad, which I could have gave most of it to like the CSA people, but like they didn't want anymore. And like, I literally, people were like coming for the garlic, and then they bought other things on the table, but it really worked because, it's hardneck garlic, it's not very common to find. And I had it at $12, I believe, a pound, and 10 and 12, two different price points, but you know what? It really moved it, and then people, they also picked up other things.
Perfect.
Some came back multiple times, hey, I'm going to the farm stand, and started texting me. I feel that like with the CSA and also, like an actual farm stand or farmer's market, you need to collect people's phone numbers. People are willing to be text. Say, would you like to be, get a personal text on something I have extra this week? It'll be on discount, you can pick it up here and there. And I'll just send it out to you only one time only, and you can say yes or no, or not reply at all, doesn't really matter, but people do text me, hey, do you have something like this, or do you have that? But I also text them, and they're like, yeah, bring it. And it's been helped to get rid of some extra. I'm not saying it'll move hundreds of pounds, but it does help, especially if they're local.
Yeah. Oh, that's great.
You know, in your travels of the day, drop off that bag at their doorstep. Doorstep drop-offs that's what I do a lot, and you know what, I find that works very well.
Oh, thanks for sharing that.
Not really a CSA, but they're people that have met you, they got from you already, and then you're just texting them a quick text, not to bother them, but just to let them know. And you get their permission to do it first.
Right, right. And you've found a customer that is eager to know what's next.
Because they wanna support us, but they might always make it to the farm stand, they might not wanna join the CSA with that money up front, but they still want access to what you have during the season. So I found that to be this year, it was pretty good.
Oh, that's fantastic. Yeah, thanks for sharing that.
Takes a lot of, logistical planning. Keep your phone, you gotta store them in your phone the proper way, you can find them all.
Yeah,
You
yeah.
don't wanna send them all as a group text, because then everybody gets these.
Right.
You gotta be able to go through really quick. Yeah, so, it's a thing I do. It helped, this was really, this is actually did very well this year.
Wow. Well, that's great. Thanks for sharing.
Having Jen at the farm stand sometimes, on Sundays.
Good. Other questions or comments?
I was a little curious, just for my own, when we were talking about like increasing efficiencies in your bottle filler. And then we talked a little bit about like planning for those expenses. In your experience, do you just kind of like assess that at the end of the season? Like, oh, I made more than I did the year before, maybe I can buy a new piece of equipment? Like, how do you, can you
Yeah.
do that decision making?
Yeah, so decision making for scaling and increasing production, I think, some of the criteria that I would use personally are, is this a product that I'm already successful at selling, and do I have a customer's unmet needs still outstanding, meaning I sell out every weekend or almost every weekend. And, an example for our operation is the bottled milk. And this is unique. We're the only farm that sells bottled goat milk in the state of New Jersey, so it's seriously niche. But, I wouldn't necessarily want to scale some of our other products in the same way, because I got cheese in the fridge still. I'm good on cheese. And we'll scale that a little bit, but, with the bottled milk, knowing that this is something that sells out week over week, I have more outlets that I could be tapping into to sell it, and I understand my cost of goods sold, profit margin's okay on it, I'm comfortable with that. So now I'd be looking at how do I make more bottles of milk in an efficient manner, and looking at investing in equipment. You can do a basic return on investment calculation with how much money does it cost to buy that piece of equipment, and then any other upgrades you need for infrastructure like electrical wiring or things like that. So what's the total cost? And let's say it's $10,000. And how much labor will you save? Because that has a value, and so you can figure that's kind of chipping away then at the cost of that new piece of equipment. How much more can you produce? And thinking about, what is that gross profit margin? Because some of that profit margin can then be going to essentially, I'm putting in quotes, pay back the cost of that equipment. So if you do those calculations by thinking about what is your production volume, how much labor are you saving, what's the profitability of that product, you might realize that in 2 seasons you've now paid for that piece of equipment. So you'll have to take the gamble that you can sell all that inventory for those next 2 seasons, but then you've now paid off sort of fictitiously, you've recouped the cost of that equipment by generating the extra revenue and saving on labor. And that would make for a solid justification, in my opinion. You might not be able to cover the cost of it in just one season because we have a finite, production season in most of our cases. But to think about, like, this is an investment that is obviously going to benefit for more than 2 years even, until we grow more. But, to say, yeah, this is going to be worth our time to get this piece of equipment and get it up and running so we can move more product out the door. Yeah. Yeah, question.
Going off that a little bit, if you're looking at like expanding, like growing something new, or like, the farm I work at right now, we're weighing on like whether we should put in asparagus. And because that has like a longer horizon, how do you like track those costs? Because like the first year you're not getting anything, the second year you're barely getting anything, if that. And so it's like so many costs that you're not seeing for a couple of years. And then like when you do come to harvest it, like adding that all in, it's gonna end up being so like prohibitively expensive.
Yeah, you'd want to actually do the calculations because essentially you're investing for multiple growing seasons on the cultivation of that before you're able to generate revenue. And this would be the similar with orchard crops, so trees, tree nuts, fruit, stone fruits, apples, and even in some cases you can consider livestock. If you're waiting, for 9, 12, 18 months to harvest an animal, and you've sunk all that time into raising that animal. So, there are ways that you're, going to have to acknowledge that there's costs occurring for multiple years, multiple tax years that are not reflecting revenue generation. And when you think about your broader business, you're going to want to ensure that you have ways to cover those costs that aren't generating revenue for that interim until then the asparagus crop comes into, harvest time, and now you have this extra boost of revenue that is going to make 2027 look amazing on the books, because you've already put in all that time. So it's also kind of going back to one of my self-assessment questions: where do you see yourself in 3 years? Because a lot of times what we do, we can't just turn around and see revenue gain in just one tax year or one growing season. So it does make that cost of goods sold calculation a little bit more arduous, and you're going to have to be looking historically at, the 3 years or 2 years that it that it took for you to do all that cultivation. But hopefully, when you look at the labor investment and the seeds and that, you still come out in the black with your asparagus sales. That's your hope. Yeah. Good. All right. Well, thank you all. This was a wonderful session. And just to go back to my website, growingbrilliance.net, this is where you can find the downloads from today's talk. And if you'd like to learn more about the Plan Your Profits workshop series that I'm offering in January, you can pop on over there too. But thank you so much for organizing this.
Of course.
All
Thanks
right.
for coming, everybody, and we'll send a recap of the workshop, a copy of the slides, some more information about Growing Brilliance and Maria's wonderful Gorgeous Goat Creamery. And yeah, if anyone has any follow-up questions, please feel free to reach out to us or directly to Maria. And thank you all for coming. We'll see you in the new year.